Welcome. My name is Sasha Moore. I'm here with Andrew McVeigh, who's the managing partner of the investment management business Ramara. Welcome.
Thank you, Sasha.
So, Andrew, I know from a credit perspective, you've got your finger on the pulse on a day-to-day basis. So let's just delve into the micro of credit right now. So what are you seeing on an ongoing basis? Where is the market at, and what are your observations at the moment from a credit perspective?
Yeah, look, it's a very interesting point. There's been a lot of expectation and conjecture that there's a reduction in credit quality in terms of the Australian economy. What we've seen, particularly in the SME side of businesses, we've seen a lot of very resilient businesses over the last 6 months. I think the COVID period and the stimulus that assisted businesses through that period has helped many businesses be able to keep a pocket of cash, and that's certainly helped them in this period. I think it's definitely safe to say that there is some decline in sentiment, both at the consumer level and also at the business level. And what we're starting to see is businesses looking at planning ahead for the next 12 months and ensuring they've got the liquidity available. And we're in a unique position when we're looking at businesses, particularly on the SME side. We're actually underwriting using bank statement technology. So we're getting a 12-month rolling cash flow for those businesses. And as a result of that, we can actually see how they're operating. Can they meet their interest service payments? Where's the diversification in their revenue streams? What have they defaulted on, if any, payments over the last 12 months? And generally, how do they manage their cash on a day-to-day basis? And that gives us a tremendous insight and something that is quite unique as an investment manager. There's not a lot of investment managers that would be out there that would have that level of detail and have such a view on the micro environment in terms of day-to-day lending and the SMEs and what they're essentially facing on a daily basis. So what we've seen with that is, as I said, there's a reduction in confidence, but there isn't a reduction in credit. So we've actually seen arrears rates have gone down, loan books have improved, losses have gone down. So we're sitting at the moment with historically low arrears and historically low losses across our portfolio. On the real estate side of the business, we've been very selective about what we've invested into and what credit we've extended. And again, we generally take a macro view and then look at micro indicators and micro project level indicators. And we've moved away from built form, so we've moved away from uniblocks, apartments, those types of things, looked more towards land banking opportunities, house and land packages, those types of things, and looked at really areas that are going to be in for demographic growth. There's a big influx of people that is anticipated to come post-COVID now. It looks like the federal government has opened up and provided a lot of opportunity for people to come and move to Australia. So we think that will be generally bullish for the real estate market. But it also means that we need to be very selective about where we invest and what credit we provide and the assets being built, because not all individual real estate markets are the same.
Of course. Well, you just mentioned sort of one indicator. Are there any other market indicators that are giving you insights in terms of where the economy will be moving and how that's going to really affect businesses in particular?
Look, it's an interesting one. We've certainly seen construction and trade come off. So that's been a market that's performed really well, and from a credit perspective, it still performs really well. But we've noticed there's fewer jobs out there. It's generally easier now to get trades. The bigger jobs and the pre-bookings of kind of labour have started to shorten. So we kind of see that as a potential risk that we're monitoring on a weekly, monthly basis. So there are a few signs that there are opportunities and there's potential challenges within certain markets. And they're definitely on our radar. But I think overall, as I said, we're at historic lows for arrears, we're at historic lows for losses. And what we're finding is people that have had underperforming contracts are bringing their contracts up into order and back on point. And that's given us a lot of confidence that we're not going to see a lot of systemic issues across the book. But in saying that, we do a very detailed underwrite and we take a very structured and detailed approach to credit in terms of what we do and how we underwrite our underlying credit.
Okay, great. Sounds good. Thank you for your time.
Thanks, Sasha.